Trump, tariffs, trade, and now a peace deal. There's much to talk about. Good morning, everyone. It's certainly been a busy week and we're only at Wednesday. Yesterday, the breaking news was the intention by the new Trump administration to impose sweeping tariffs on trade partners, specifically Mexico and Canada. What's different about this action is that the US has a free trade deal with Canada and Mexico, and in fact, the recent vintage of the trade deal was negotiated by President Trump himself during his last term in office. The imposition of these tariffs would have marked effect on both Mexico and Canada, but would likely meet with retaliatory action from Canada in particular. And this would matter from the US because despite the US being energy independent, it actually needs to import 5 million barrels of oil from Canada to offset the fact that the US needs lighter crude, whereas it makes too much darker crude. So these are likely just to be more talk than action in an effort to try and close the illegal immigration which is coming from both the north and the south border in the US. However, there was also the imposition or the likely talk of imposition of more tariffs on China, and the market continues to look through this in the short run, perhaps expecting that a trade deal of some kind with China might be the first major achievement from the new administration from Donald Trump. But of course, we also had, at the end of the session, news of a peace deal between Israel and Hezbollah. Now, the market reaction was largely muted. There's been market exhaustion really to the escalation of conflict there over the last several months. However, on humanitarian grounds, we can only hope that it leads to the wider spread of peace across the region. So with all that, it was perhaps somewhat unsurprising that the US reached new highs in the S&P 500 and finally closed above 6,000 for the first time ever. So if we look back over the last 5 years, the S&P has doubled since the end of 2019. For those of you who've stayed invested, that would be a compound return of 16% per annum. Remarkable. And in fact, even more remarkable that during that time, we've had COVID, we've had lockdowns, and we've had the highest spike in inflation in 40 years. So if the S&P really does set itself apart as the gold standard for equity indices. And of course, that does lead to the US being the only positive growth story in town. The Richmond Fed Services Index yesterday sizzled, with the employment component showing a 30-month high in hiring intentions from US-based employers. So with the US already growing around 3%, unlikely to put in place any fiscal tightening with the transition from Biden to Trump, it really is a growth story which casts a shadow on Europe and the rest of the world. So there is some optimism there for us to reflect on. It is the US again, but we continue to see positive equity returns from the US. The rest of the world continues to struggle. That's all for today. Please take care and we'll catch up with you tomorrow.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.